I have just I have a lot of I have a lot of problems trading. I mean, I don't know if it's a lack of confidence, if it's a lack of patience, or I just need to. I like feel like I told Pitbull, and I know that this sounds funny. We were talking on the phone about 25 minutes ago, and I sent him some charts that I'm going to show you guys, and I sent them out on to him on Friday, and it may be hard to recognize this pattern, but I told him that I thought what was going on, there could be a potential melt up. And I know that there's a lot of people out there that think the S&P has gone far enough, and I think there's another case for this. And I think it really, at the heart of it, I think the Federal Reserve is really has been really critical in this most recent leg up. Now, I'm not saying from the December 26 lows, but once the Fed acquiesced in that Fed meeting, I think it was in January or February. It seems to me the markets are bid. And does that mean that they're going to go straight up forever? No, I doubt it. Does it mean that you can't sell some rallies in here? Sure. But I think the overall price action, and I'm not necessarily talking about right this second, is that the markets rally early in the day. And if you get short too early, you get run out. And then if you're patient and you wait till 11:30 or 12 o'clock or whatever time that the markets start to pull back, definitely space. I agree 100%. And one of the reasons I say this is because Marty's a huge premium seller, and when the markets were going down, he was rolling down his puts, and he was doing it every day. And when the markets were going up, he's rolling up his calls. And every time he does that, he takes a big hit. And I said to him, this is only about a half hour ago. I said, I remember there was this crazy website. I can't remember what the name of the company is, but the guy was so fed up, and I'm not at that point, but he was so fed up. He took all his screens out in his backyard and lined them up on a wooden bench and took his shotgun and just started blowing up his screens. Yeah, you're 100% right. Jerome did. Marty said, well, if you do that, I've got some old screens over here that, you could do it. And I'm not, this is what I do. Whether I'm completely successful at it, I don't know. I make, I lose, I make, I lose. I feel like a yo-yo. Last week I did okay, and I'm only down a little bit today. But we don't come here to make a little bit. I mean, you want to take as much advantage of these markets as you can. But before I covered, I said I thought that there'd be another pop up to 28.18. We got to 28.14, which was actually a level I was looking at. And I still think that at some point, either today, tomorrow, the next day, after a little pullback, a little back and fill, I still think that they're going to go higher. I really do. I think there's more upside. But as I present, I want you to understand that I'm not. I don't know. No one ever took the other side of that. But who knows? Maybe there'll be someone out there. But anyways, as I do my presentation, I want to let you know it's not like a lot of these other guys have presented. They're really, we had some really great presenters. I think you guys will agree with that. Trader Dave did great. Dave Dubay is always great. Stock Traders Almanac. I don't want to leave anybody out. But we really had a good lineup. And I'm going to be talking to Marlon. I think it's critical, or it has to be part of Mr. Top Step's mission, that in the next 90 days, we do another boot camp and we invite everybody back in and we bring in a couple more presenters. And I know Marlon's probably going, oh, no, oh boy, I don't blame him, because he's absolutely worked his ass off. And so is John Doherty. And I want to thank both of them for helping out. Thanks, hon. I agree. I think it is one of the best. And I said that. I said that to Marlon on the phone the other night. I said, I think this is by far and above our best boot camp. But as I move into my slides, I want to explain that these slides are more about me and how I see the markets than they are necessarily um, an indicator or yeah, there's going to be some opinions with them, but at the end of the day, I think we live in this ever-changing trading environment. I've been saying it for years, and I remember, and I think I've said this before, when the pitbull used to call me on the trading floor and put in his orders, he was following the premiums between the S&P and the S&P cash. If the market started to tumble a little bit and the premiums, the S&P was at the right discount, he knew that he could call me up and I'd be on the phone with UBS. And he knew that he could get as much flow as he wanted. And today, there's a guy that wants to join Mr. Top Step. He's very, I think, kind of like a Trader Dave type. His name's Morgan. I call him Morgan Stanley Mark, and he creates flow. And I think flow is important, and that's what this has been about. To tell you the truth, you guys, everybody that came in here, someone would put up a slide or show you something, um, give you an idea of what they were thinking, and then you guys would react. And to me, that's creating flow. That's creating trade ideas, and helping implement new ideas into your trading. Hi everyone back from doctors. That's took much longer. Okay, all right. Um, I hope you're okay. I mean, I'm all in on those doctors. But anyways, I don't. One of the things that I've learned over the last couple of, I'd say over the last 6 months, is that I need a new skill set. I need to really, really work with. Hi, Christine. I really need to work with Investor RT, and I plan on doing it. And they're going to spend several hours over the next couple of weeks retooling my charts and helping me understand some of their new indicators and things that I told them, listen, I don't want to be loaded up with a bunch of stuff I don't understand. Yeah, of course I understand moving averages and and I understand levels and all that, but there's so much good stuff out there now, and I think these charts, these old style charts I had, are still good. I mean, to me, I like trading. I like trading volume, but at the end of the day, when the markets look great and they're going up, you find yourself kind of stuck in a you find yourself like, what do I need to be looking at? What are the things I need to add to my trading toolbox? Well, I think I need to add a lot more than me just firing away when I think that they're making a high or making a low. It just doesn't work out as well as it used to. And again, I think part of that is my old scalping mentality on the Merc floor. And to tell you the truth, guys, I really, really believe that it was easy for me back then. And even if I wasn't on the phone with UBS, or I didn't have More Capital or Citadel or Raj or any of those big accounts on the phone, what I would do, in fact, because I wanted to be able to tell the customers in that desk that no one traded their own account. Well, you know what I would do? When I wanted to trade my own account, I went to a separate desk away from where Brian and all the guys were. That way, no one could say, hey, D-Boy's up there, D-Boy's down there, they're selling 1,000 and he's selling 20 or 50 lots. I didn't want that. That's not me. It's not how my dad built his business. It's not how I want to build my business. And I'm either going to be successful or I'm not. But I think at the end of the day, I've got to go back to the drawing board. And am I afraid to go back to the drawing board? No. But what I want to do is I want to learn this stuff unhindered, um, and really, really, really sit down and figure out the things that I need. That maybe call it the Simpletons Trading Course 101, where the guys from Investor RT come in and say, Danny, look, here's some things that are simple for you to use that we think will help you make trading decisions. And that's what I think I have to do. And obviously, there were a lot of great things that I took in over the boot camp. And I've already started looking at some of those videos, and to tell you the truth, I'm glad that Marlon captured this stuff on YouTube because I'm going to go back. I'm going to watch them. I'm going to watch all of them. In fact, I've already watched about 3 of them. But anyways, as I move forward into the slides, again, I want to explain. I don't pretend to be the biggest and best trader. It's a process that I've yet to master. That said, I have had some okay success. I mean, I was doing okay last year up until the middle of November when I lost a third of my profits on the year, screwing around with the Nasdaq, jumping in and jumping out, and lost $14,000 in the first hour of the day, and traded 135 Nasdaq aside, and then pushed back from the screen and said, "God, what are you doing? What? Why would you work so hard to just rip yourself up like that?" But that's the way it goes. That's the way it goes. So, anyways, let me move this forward a little bit, you guys. Um, and again, you know what? I'll have John put in the links to this as I talk if he could. But this is just kind of a view. This is like a D-boy kind of view. This isn't anything that you're going to learn an exceptional amount of information from, but more about how I perceive what's going on in the markets. And again, I want to thank you guys for coming in. This is from Yahoo Finance, and yeah, well, I agree with that almost. But God, you never sleep. So, anyways, let me jump into this. There's so much going on with the Trump administration right now. I, I, I'm, I believe it or not. I mean, I know politics. They say politics and the markets don't mix, and I agree with that. But when I look at this and I look back on that campaign, I think to myself, he made certain promises. And I think that if he was able to, he would deliver on all of his promises. But those promises are not always in the best interest of the long term well being of the stock market. Now, we've yet to figure that out yet. But there's 4 wars on the economy that Trump's working on right now. He's got the trade wars going on. They're still going on with Europe. He's got the trade wars in Europe that are not settled. He's got the trade wars in China going on, and they're not settled. Now it looks and it appears again, um, getting oriented from here a bit. D-boy on mic, so I will get in a mic. Okay, thank you. And Venezuela, of course, and thank you for that. But he's got all these different wars that he's involved in. And the big one, I think the number one are the trade wars. And it does look like they're moving in a positive direction. And I think the markets have reacted in kind to that. So good, bad, and different, I don't know. But he's doing what he promised, and I think that that's what presidents should do. They shouldn't sit back. They shouldn't let things happen like what's going on in North Korea, Venezuela. Um, but again, the United States doesn't need to be the global sheriff either. I don't want the United States to get too far involved in Venezuela because we've already had so much intervention in South America. There's such a long history of that helping the people, yes. Militarily going in there, that would be the biggest mistake that we could get involved in. But anyways, attacking the Fed. Do I agree with it? Look, at some point, there's going to have to be an out for the Federal Reserve. And when the Fed was doing all that quantitative easing and trying to come out, they said, look, if the economy starts to go bad or the stock market goes back, I think they're kind of one and the same, to tell you the truth. That they would go back to doing more quantitative easing. Well, I kind of agree with what Trump was trying to do there, but I really don't know if just stopping raising interest rates and no longer paying back the Fed's $50 billion a month of its 4 trillion in QE, that's the proper thing to do. But that said, everybody loves a bull market. Everybody seems happier. Um, yeah, well, the bull's going to come. Yeah, I agree. The bill's going to come due. There's no doubt about it. So sooner or later, we are going to have to pay the piper. Um, I don't know if that's something that I don't know if that's going to come this year, next year, when it's going to come. But I think that we all know that this is going to not end up well at some point. There's going to be something very, very bad down the line that will happen to the market. And I think it could be as bad or even worse than the 2000 and 2008 credit crisis. At that stage, I don't really know what will happen. I don't know how many more tools are in the Fed's toolbox. But that said, I guess they can just go start printing money and building up more debt, and doing more bond buying programs, and the markets will love it. So, but again, I think that there's this there. I don't know. I don't know what else they can do. I just don't know what else they can do. The border wars. You know, I personally believe that they say there was something written, and I don't want, I can't remember who it was. I read it in Investor Business Daily, that by 2050 there'll be another 75 million migrants in the United States. I mean, can you imagine that that and again, I don't want to blame the Democrats. I don't want to blame the Republicans, but as a citizen of the United States, and knowing how the economy is going, and how much money it costs to support these immigrants, is it um, yeah, 50,000 cross every month. How are we going to keep up with this? So at the heart of this, um, I believe that the wall is right. I mean, if it just stops part of the flow, it's worth it. And based on the cost, the $4 billion cost for that wall, I think it's stupid that the thing's just not being built. Look what's going on in Europe. Look what's going on in France. Look what's going on in Germany. I mean, they have this open, wall rule about people coming over these borders, and I don't want I don't want to swear or anything, but I think that France is fucked. I think Germany's fucked. If they don't come to the realization of what's going to go on, absolutely, absolutely, there's going to be well, more terrorists have entered through Canada. Well, I mean, I think it's just going to get worse and worse. It's just, everybody wants to go to the U.S., and not all these people are made for the U.S. I mean, how about that? What's her name that joined ISIS, and she wants to come back to the United States? I don't want her back in the United States. I don't care if she got a U.S. passport. You go over to that other side, you start attacking United U.S. troops. Forget it. You're not welcome back in the United States, and none of those people should be welcome back in the United States. What do you do with them? I don't know. I don't know. And then the war on the nation's solvency, 22 trillion in debt. I mean, how high can our how high can our national debt go? I mean, it puts us at such a disadvantage globally, but yet we're still one of the safest economies in the world. It's kind of like an oxymoron. You've got this big monster sitting on the fence, and it's eating and eating and eating away at us, but yet no one can really do anything about it. I mean, I really make it a comparable situation to like what's going on in Chicago. They say there is no one fix to Chicago's debt problems, or Illinois' debt problems. That the pension funds are owed so much money, there is no one way to fix it. And I follow this very closely in Illinois. That they just did a big raise, for state employees. I think it was like they they're in so much debt, and they turn around and they give like 3 billion in raises to Illinois employees. What's going on there? I mean, it really is one of the most crooked governments ever. I think in the United States, they just can't do it. They're just not willing to take the hard measures that it's going to require to get Chicago and Illinois back into a more fiscally responsible plan. I don't know, what do you want to call it, But I tell my wife this all the time, and she just doesn't get it. She doesn't really. I hate to say it. I don't pretend to be an economist. I've always said I'm not an economist, but I understand what's going on there. Because my wife doesn't understand it. A lot of my friends in Chicago, they know that their taxes have. One of my buddies that's living downtown Chicago, his taxes in the last 10 years have gone from $14,000 to $34,000. That's those are state income taxes. I mean, and he's telling me, he said, my wife and I aren't getting along well because I want to sell the house. Well, that's exactly what I want to do. I want to sell that house in Chicago, put it into an investment somewhere. But like I said, I think you guys heard, I went over to Chase Bank, and Chase Bank wanted to take like they wanted to offer me like a 3.5% return, and the money would be locked up for 6 to 7 years. Forget about it. I'm not doing that. What I plan on doing, I was supposed to go over there today, and the guy texted me a little while ago and said, "Oh man, you missed the meeting again." I'm going to go over there and sit with him. I'm going to say, "Look, I'm going to start to um, put like 15 or 20 grand a month in into um, in, in, into a mutual fund. I mean, and every month I'm going to put a little bit in. I'm going to put a little bit in. I'm going to put a little bit. I'm going to do it over a couple of year period." Um, and I mean, I'd rather do that than have my money tied up. But anyways, the President Trump has made some big promises and promised a big agenda, and he's been delivering on a lot of his campaign promises and more. I agree, he is. And at the end of the day, like him or dislike him, you can't argue with the numbers. He's done a great job. Employment, the strongest economy, and God, I don't know how many years, but he's done a great job. Now, is he very well liked? I don't know. I think even his own constituents are kind of scratching their head about what's gonna happen next. These investigations, etc. I'm going to move the slides forward. Um, now here's kind of where I come in with my gut feeling. Okay, I think and again, I don't want to be overly bullish after a 450 handle rally in the S&P, but at the same token, or 500 handle rally. At the same token, I think that positive outcomes in North Korea, positive outcomes in China, um, the Fed backing off, you could potentially see something very, very, I should say, we could see a much bigger move up. And I think it's more probable that we see the S&P take out its contract highs in the next. Yeah, I know. I've read about New Jersey. I don't know when in the next couple of months. I think that we're going to see the S&P above the contract high, and I think it's going to be very, very hard to stop it once it gets going. I've been talking about a melt up for a couple of weeks, at least not a couple of weeks, over a month. But this is out of the Wall Street Journal. We all know what happened in the end of September, and and how the Nasdaq and the S&P fell into a bear market, and it had a decline of more than 20%. Nasdaq made its high on August 29th and reversed. And during that time, what was going on, and I wrote about this in the opening print, is that there was huge, huge selling going on. There was liquidation, like in these big, big funds like State Street Global and these big mutual funds that hold these big tech uh, were really long FANG. And for weeks and weeks and weeks, there was mammoth liquidation going on in FANG. Um, you know, the technology giants were powered like the pit bull. He always said that the United States, no matter what happens, will always be the technology leader of the world. And I believe that. Um, and there's no doubt about it that, four or five stocks were making up what were they saying, like 75, 80% of the NASDAQ's gains? That can't work. That doesn't work real well. You know, I mean, when you've got four or five stocks that are making up 80% of the Nasdaq's gains on the year, you know, something's got to give. And it did. Once Facebook started doing their stupid shit, I think that there's just mammoth liquidation, and it continued. And I think a lot of money has been put back to work, but it's still still a big question mark about what's going to happen. You know, fear of growth slowing. Um, you know, I don't see that happening right now. And again, I think that any kind of deal that the Trump administration can pull out on trade, and who's to say that he doesn't get some type of agreement with North Korea and we get a trade deal with North Korea? I think he could be headed toward that. And again, there's a link at the bottom of this chart if you want to look at the story. I mean, it's kind of it's in the rear view mirror, but it was an interesting story done by the Wall Street Journal. Um, this is, oh boy, what's going on there? Did we didn't lose the charts there, did we? Um, okay, cool. We all know. Look at these charts. Okay, no, we got it. They updated the charts for me. That's great. You know, from the closing high of 29.40 quarter on 9/20, it took the ES 66 sessions to go into a bear market territory, down 20% from its 12/24 high. I mean, I've seen it. I mean, I always say that I've seen a lot of stuff, you know, that I've always been part of every major market move in a long time, but I don't believe I've ever seen anything like that. I just don't believe I've seen it. Does that mean that other people haven't seen it? Maybe, I don't know. I wasn't around in 68 and, you know, 69, the 69 bear market where the market sold off, rallied, and then just came flying back down. But I remember 87, the weeks leading up to the 87 crash, we all knew that Tudor was in there selling the S&P. We saw it every day. You know, there was some very, very well thought out trading going on back then, and the markets were extended, and and in came that bear market. But this was a different type of sell off. I think that, you know, I mean, I hate to say this, you know, about the 90 rule that it takes 90% of the people 90 days to lose 90% of their money. And I think during this sell off and rally, there was a lot of losses established by small retail customers. We saw it in our forum. Everybody saw it. It was industry wide. Um, let's get to the next slide. The NASDAQ went from a closing high of 76, 74, 75 on 10/1, and it took the 52 sessions to go into a bear market territory, down 20% from the 12/21 high. I don't know. I mean, you guys can tell me. Some of you guys have been trading for years. You've been around for a long time. Um, I just I look at it and I think to myself, Jesus Christ, when I was doing the program trading on the floor, there was a lot of volatility that was involved in that. But I don't remember anything so volatile and so harsh when it was going on, especially the down move. The up move, we all kind of had to know that at some point the market was going to bounce. But did we know that the S&P would bounce 21% after a 20% decline or 22%? I just don't see. I didn't see a lot of people jumping up saying, "Hey, don't worry about this. This is going to end up okay." There was just so much shit going on at the time. And the other part about it, back when I was on the phones on the Merc, there wasn't as much high frequency algorithmic trading. Today, I think the main culprit here, there's two main culprits, and one works hand in hand. One is, I really believe this. The Chicago Mercantile Group knew that high frequency trading was going to create more volume. And as more retail traders got screwed by PFG and MF Global, and you know, the flash crash, we've lost thousands and thousands of traders in this stuff. So when you get moves like that, you would think, well, hey, great, the volatility jumped up. Everybody loves, volatile markets. Well, when the Dow, you guys don't even know about this. I've never even really explained this. In February, when the markets started selling off, the pit bull covered 14,000 big puts in the pit that day. And that was when the Dow was down 200 or 300 bucks. He got out of those 14,000 short puts, and it set off a chain of events that I believe led to the Dow dropping 1,500 points that day. And let me tell you why. There was a big fund in Chicago, short option premium fund, that had quadruple the size of Marty's positions on. When Marty got out, the market makers in the S&P options pit got blown out. He lost $25 million that day. I don't talk about this much, but trust me, I've been around, I've seen this before. And what happened, and I know this from John and Brian being on the floor, I would talk to him. He did 100,000 options that day. We're not talking fucking minis either. We're talking real big, the large contract on the CME and the S&P option pit. 100,000 contracts. The clearing member, the guy that clears the business, was calling our desk, and John said, nope. The guy said, is Marty out? And the guy and John said, yeah, Marty's out. And he couldn't believe it. They had to forward the sheets, the spreadsheet to them in the back office. And the guy came back and he said, it was some of the greatest trading he's ever seen. Over the next couple of days, that big fund and several other funds completely blew up. The one fund in Chicago had over $850 million, and it was almost $1 billion fund. And it blew out the whole fund. Wells Fargo sued them. They could not get out. And I remember Pitbull coming over to the house that day. Yeah. I remember the Pitbull coming over that day, and he was all shook up. And, look, a friend was here the other day, and he came over, and we were talking, and the guy said, what do you guys got in common? And Marty looked at him, he goes, Danny fought his ass off on the floor for me. I told you, I got a 10 grand fine for getting in a fight for Marty. He told Brian on the phone one day that when I got a bad fill from this guy, Wally Posner, I told him on the phone, I said, I want to beat the fuck out of the guy. And Marty says, you go beat him up. I'll pay the fine. After I whacked the guy a couple times and we're rolling around on the floor, every phone on the trading floor lit up. And a couple of guys called up Marty and they said, Marty, you hear about what's going on with Danny? He says, yeah. He said, I heard about it. I got my own kids. And he hung up the phone. Yeah, such is life. I got to pound the guy, but I got my ass in a lot of trouble. But the thing is, what makes Marty different than a lot of traders is that Marty is a reactionary trader, tape reader. He sees things going on the tape. He sees the market leaders starting to roll over. He knows that he has to get out or he has to adjust. And he doesn't wait 1 second once he sees it. And that's one of the things that I've always respected about Marty is that his ability to get in and get out. And he said it in the Market Wizards book and other books that the best trades he ever made were not winners. They were getting out of losers. And there's a lesson to be learned in that message. It really is. I mean, you don't think of it that way. You know, I like watching crude oil. I don't trade it often, but I do think it's a very, very tradable contract. And sometimes I think it trends better than the S&P. Now, not necessarily, not per these charts, but CL chart, the CL went from a closing high of 74.29 on 10.3 down to 42.68 on 12.24, $31.61 drop or 43% drop in 53 sessions. And since then, really 15.46 or 36%. These are big moves. I mean, I really would love to get a crude trader in the room because I think that there's so many good trade setups in crude oil. Now, my I'm going to tell you what my view is on crude right now. I think you got to be very weary of crude here at its highs. At 57, 58, $60. I think that over a period of time, and I'm not going to say in the next couple of weeks or month or whatever, but I think that we're getting pretty much to a pretty critical level. And if I can run my cursor, I don't know if you can see this, but around the 60-50 level, I think that you got to be careful. I know that the Saudis are always trying to, talk about lowering production and working with the Russians and all that, but I don't think OPEC really works anymore. I just don't think. I agree. I agree, Space. I just don't think OPEC has the power that it used to. The United States and its shale production, and who knows? You open up the floodgates in Venezuela. Venezuela is either one of the largest or the largest oil producer in the world. So think about if that wall ever came tumbling down. And I think if the government ever gets replaced in Venezuela, I think the new guy, I think he's going to be open to having better relationships with the United States. And at that stage, I think crude's going to get completely killed. So there's probably a lot of reasons why these countries don't want to see the United States get any kind of deal with Venezuela, and I think energy would top the list. Gold. I had a really, really good call on gold a couple of months ago. People started asking me. I told you guys I worked in the gold pit at the CME. I watched everybody steal their asses off. It was unbelievable. I think I was in the gold pit when it traded from like $250 to $650. And that was one of the largest moves in gold's history. And back, I can't remember exactly, but I said when gold was trading around, I think 1240, 1248 in that level, I said I didn't think crude was going to go up, and I thought that the next move would be back down to 1185 and then 1150. It got down to 1179.60. I wasn't that far off on my call. Now our gold has gone all the way up to 1350, and I'm not quite sure that gold's done here either. This is more of a risk on, risk off trade. People get out of stocks. They want to go. They want to get into commodities, or they want to put on a hedge on risk. They go into gold, and that's what people have done. They've been flooding back into gold. Now, the other side of the coin is that this trend, we all know that once everybody gets bullish gold and silver, we all know what goes on. The thing's going to it'll Columba right back down. One of the things I always think is great about the metals is those TV commercials. I've said it 1,000 times that, the guy comes on and he says, look, buy silver, silver's going to, blah, 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 gold's going to, 30,000 and all this crap. It's not going to happen like that. There's too much supply out there. But that doesn't mean just because there's a lot of supply out there that gold can't continue higher. My own feeling is that gold potentially could go to 1380, 1385, maybe 1400 bucks. Do I want to buy it into any kind of rally? No, but any kind of $20 pullback, something like that, $25 pullback, I think you buy pullbacks in the metals. So let's see where we're at here. I mean, this is really just things to think about. Am I right? I don't know. And then after the NASDAQ went into a bear market, the NASDAQ exited the bear market. The New Year rally in technology stocks lifted the NASDAQ composite to its ninth consecutive, or 10th now. This is a 10-week rally that we're seeing right now. All three major stocks indexes. Well, we all know that. Um, let's see. It's the largest rally since 2009. I haven't updated this. These are article, Wall Street Journal articles that I pulled. I think they're good reference points, but it just shows you how quickly things can change. 1 minute we're in a screaming bear market, the world's falling apart, and then the next minute the markets are just ripping back higher, and that's the way this is played now. It's not all humans. Humans make a very, very small part of this now. Yeah, sure, the big hedge funds and the big ETFs, they start to trade WTI. Um, the What's up, Sanford? Sanford's a crude oil trader. We should get him in the room. Anyways, it just goes to show you. I believe that in my heart of hearts that these are not all human moves. Yes, when the markets were going down and we had all that liquidation in tech stocks, um, there was a mammoth amount of hedging going on. I still think, I mean, you guys may think I'm wrong, and that's what trading's all about. I still think some of these big funds are still short. I don't think all of them have got out. I don't think they've all. It may sound crazy, but I don't think they've all lifted their hedges yet. Yeah, they did turn the machines off in December. They turned them back on in January, though. But anyways, so into a bear market, out of a bear market, it's all the same thing. And the next one is the Fed funds rate history and the prime rate chart. Look, let's just face it. When you look at this chart, and this is very symbolic of what was going on during the credit crisis and all that quantitative easing. The more quantitative easing they pumped in, the lower the rates went, the higher the S&P went. Period. The end. It was all about rates. It was all about this chart shows the monthly changes in the Federal Reserve Fed's fund rate, prime rate, and consumer price index in relation to the S&P. Interest rates are a key indicator of the current state of the economy. I couldn't agree more. I've been talking about this. I've been saying that I think that the Federal Reserve backing off interest rates is more important than a trade deal with China. Now I'm not going to say that if the Trump administration gets a solid deal from China, that they both won't work together. But I think in the long run, in the bigger playbook, that the Fed keeping rates low is really, really, really going to be what's going to be part of. I think it is. I shouldn't say could be or what is. It is part of what's going on right now in the stock market. Um, you know, I think what we're really positioned for now is we're positioned for some bad headlines. We've had so many good headlines, but Druckenmiller said Fed policy is number one indicator, and I think Druckenmiller, Gil, I think you're 100% right, and thank you for that. I think that Druckenmiller is one of the smartest traders out there. I really do. Um, so as long as between Russia, Saudi, China, and Iran, I think, yeah, I think that, yeah. But again, I think that this chart is a good representation of what happens when the Federal Reserve decides to lower its quantitative easing and start to raise rates, and what happens to the S&P after that. So as you can see, I think that right now the way this is working is I think we're Fed supercharged. I don't know, does that mean that China's not important? No, it's very important. It's it's essential the United States and China come to terms. You can't have the world's two largest economies going at it financially and militarily. There's something bad, very bad that could come out of this, and I don't think that I hope that we don't see that. But my own opinion is that President Trump is trying to shore up some type of deal, and I think he and Xi at some point will come to some agreement. Will it be exactly the 141 points that the United States wanted? I doubt it, but I think that they're going to address the the key points of getting a deal. And I think that's going to be extremely bullish. And I also think that these upcoming talks in North Korea are going to be very important also. All right. And into my final slides. We all know, we all, now these are old school charts. Remember, does anybody remember CRB charts in Chicago? Anybody remember these guys? They were the biggest chart makers in the industry, and they're still around. So, anyways, I know the guy that runs CRB in Chicago, and I remember when the Nikkei sold off. The ES has rallied 9 straight weeks, and if you look at the Nikkei chart, there are 2 distinct possibilities. Either the ES is going to go crazy and make new highs for the next 7 to 8 weeks. The Nikkei started to melt up in January of 1988 and rallied from 21,000 up to 40,000. Now, I know this is kind of this is stepping out on a big limb, but when you take all the moving parts here, I think that what I'm talking about, you'll see what I'm talking about, and I'm going to ask John. These are the charts. So if you guys want to grab these charts and make copies of them, I would. Look, I'm not a big chartist, but I remember this move. I remember what was going on back then. It was right after the 87 crash is when the Nikkei started going up. And it continued to go up. And it went up and it went up and it went up. And I think that there's a possibility. Let's look at these charts. ES is really, well, this is going to be the 10 straight weeks. And if you look at the Nikkei chart, there are 2 distinct possibilities. Well, I think that's the same stuff. That's all right. That's the same stuff. This is the E-mini S&P. From the closing high of 29.40 quarter on 9/20, it took the ES 66 sessions to go into a bear market territory, down 20% from the 12. Okay, this is the same stuff. But if you look at these charts, I had some other notes that I can't seem to pull up right now. But if you look at these charts, there is a distinct, they resemble each other. I mean, they really do. And I know that you probably don't look at this stuff. You're going to say, oh, wow, a Nikkei S&P comparison, huh? Well, is the United States heading into a situation like Japan? I don't know. I mean, it could be. It could be. I mean, I don't think you can rule out anything. This is kind of a crazy world that we live in. But these charts are very, very much, they look like they're setting up to me. I mean, maybe I'm wrong. Maybe I don't know how to read charts as well as you guys. But maybe what some of you guys could do me a favor is print these charts and look them over and come back tomorrow and tell me what you think, if I'm right or wrong. But I think, if the S&P starts going up and starts taking out its contract highs, I think you could really, really see another big upside push. And especially if we get some kind of trade deals. I think the trade deals will only add to this idea. The Dow futures made a low at 21,452 on December 26th and rallied 1,500 points that day. I remember that day. If the pattern repeats it, what the Nikkei then, if the pattern repeats, the Nikkei then and the Dow futures could go to 39,000 to 40,000 by 2020. These are bold calls. I don't know. You guys may think I'm crazy, but if you open these charts up, do you agree? Do they look similar? And there is always a but, if it doesn't make new highs in the next 4 or 5 weeks, we could see another pullback down. That's only logical. If the market can't scream through these highs, then probably pull back. But I think the gunpowder here could be, we've already got the Fed backing this. Now, if we can get North Korea lined up and we can get China lined up to do deals, I think that the markets are going to absolutely skyrocket. Now, this is the end. This is the end of my slides, you guys. Like I told you, I'm not like a David Dubay. He's a much smarter man than me, and all the other presenters. I just try to work off of a feel for what I'm seeing, and I try to put it together. And these are the things that I've been kind of thinking in the back of my mind. I think the markets are Fed powered right now. Any kind of trade deal is just going to be the icing on the cake. And I think that there's a very good possibility, based on the way these markets have been going up, that we could keep going. I mean, there was a fund trader that said, years ago to me, he said, Danny, you know what you do for a living? You're trying to pick up nickels in front of steamrollers. Well, he's 100% right. But you know what? I've had so many trades where I bought a low, and if I had just walked away from the screen, I mean, even in the credit crisis in 2009, I think March of 2009, when the S&P went down to 666, we went out on all our instant messages and all our direct lines that day, that we thought that the S&P was going to rally from that level, that we thought that there was a low in. And then after the S&P rallied a couple hundred points, I went back out and I said, you know what? It, this isn't the bottom, that there's going to be a retest. I should have just kept my mouth shut. We called the low of the, I mean, I even have charts and conversations of when I went out. We had some stuff that people saved that it actually was sent to me, that's saying, remember this, and I do remember that. But how would I have known that the S&P would go all the way up to 2,900 from 666 in the S&P during the credit crisis? Now, to finalize this, you guys, we're gonna Mr. Top Step. I'm just gonna say it as it is. We need for us to. It's not about us making lots of money. We don't make lots of money personally. Marlon and I think he would agree that we work pretty much for free. If we tried to take money out of Mr. Top Step, we couldn't pay the guys. We wouldn't be able to pay for any of the technology, the charts, all that stuff. And I don't think that we're alone. I think we've outlasted most of the people in the industry. We've been around for 12 years, but we need your guys' help. After the last 2 weeks of presenters and being in the room, Marlon's got a schedule for the different products that we're presenting, and I'm going to show it to you. Um, we've slashed prices considerably, and I'm just going to go real quick, and maybe even Marlon could jump in here and talk. Um, the MIM the MIM room is 99 bucks. That's a flat rate. You get Marlon coming in, trade the guys in the MIM room. Marlon, are you on? Okay. You want to talk a little bit about the deals? I know that you put this together. Probably better coming from you. Um, right, right. Okay, and the other thing is that Marlon and I had a big talk. We are going to be offering classes for Raj and his equity options class, and Kevin Coy for the market profile. And you know, we had a hard time getting um, nailing down prices from these guys. So if you're interested in either of those two guys, you want to email classes at mrtopstep.com. And what we'll do is we will reach out to Kevin. I mean, I think Kevin's a very smart guy. If we can just keep him focused for 10 minutes, he's got a he's got a really good small class that he does, and then he's got like a 3 day full class on market profile. Um, we don't know exactly what he wants to charge yet, so we're still working on that. But if you're interested in either of those two guys and doing some classes with Raj or Kevin, just email us at that email, and we'll get back to you. We'll hit them up and we'll connect you guys so that you can talk to them about their classes. But we are going to continue to offer them. We're just trying to, so much going on during this boot camp. And Marlon, really, I want to thank you. You worked your ass off, and I think you did just a super job. But other than that, you guys, Marlon, so we keeping this open for another day, or what are your plans? Okay, you guys, it was great having you in the forum. You know, we've always said that we try not to push products real hard. We're not pushing products real hard, but at the end of the day, we're a collective of traders that tries to do its best, and I think we did. I think we did our best. I think we put our best foot forward, and we're hoping that some of you guys take the next step to be part of the Mr. Top Step crew. In the interim, that'd be great. That'd be great. It is a nice idea. And if Niels have a link for his product? Niels, if you put up the link, yeah, put your link in there. Neil, Niels, where are you right now? Niels is all over the world. That is. Oh, he's an answer now. Okay, he's a great guy. But anyways, you guys, thank you so much for coming in. Like Marlon said, we're going to try to do a weekly workshop, and let's just hope to see you guys again. I mean, and if you ever need to get a hold of me, um, and if you ever need to get a hold of me, just email me. I'm always going to answer my emails, and we'll see you on the rebound, you guys. Hope to see you next, in the coming days. Trade well.